It's with great pleasure that I will introduce the next keynote speaker, and that's Erik Strand, whom I don't think really need an introduction, but he is the founder and let's say the brains behind AuAg Funds, a very successful fund, not only due to the rise in the commodity prices, but also before picking the right investment. So give a warm hand to Erik. The floor is yours.
Thank you. First of all, I would like to say thank you to Nordic Funds Mines for having this event, and all the people, technicians, service, everything. Alex, Henrik, Sam, thank you very much. I think it's something special that we are becoming not a club, but a community interested, investing in gold, silver, all other metals, miners. And so that's something new in Sweden. It's the second time we have this event. And I think it's the beginning of something really, really big. And today we will speak about gold and silver, and also a lot about miners, because that's what I think is really the next thing within the space. So let's start. AuAg, gold and silver, that's our company, and we do invest in a lot of companies. And we are an asset manager, so we are not a mining company, but we are investing in the mining companies. And this started actually in 6 years ago, almost, November 2019. So it's we have some years, but still a very young company compared to the old asset management companies. But we are also very focused on metals and their properties. Wanted to change this number. It should say 4.9 billion Swedish crowns, because we had a good day yesterday and a lot of inflows. So getting close to the 5 billion mark, and that's in US dollar, a little bit over 500 million US dollars. So growing fast, and also growing fast regarding our investor base. Started the year with approximately 40,000 investors. Now we calculated to 60,000 investors, and growing in Sweden, in the Nordics, especially in Norway, but also getting investors from other countries like Switzerland, as we have them here as well. So what are we doing investing? Our focus is actually on portfolio construction the fund. And this is very important because we are measured against ETFs that are supposedly cheap, but that's what we are compared with. So we really have to focus on the portfolio construction. And this is very important because ETFs in small sectors normally are not so good. So sometimes it's rather easy for us to be better. But it's very important to have the portfolio construction because we hold our companies forever. That's what we want to. And we add or sell, but I will come back to that later. And that's one of the good properties with the fund that we have. It's the ongoing rebalancing. So we have target weights, and then we let them ride, but still when they are performing much better than the peers, we start to sell a little bit. Also the ones that are underperforming, we let them underperform a bit, and then we start to buy. And this rebalancing over the years is rather hard to do on your own, when to sell, when to buy more, to keep the portfolio in balance. Otherwise, for us, it's very important to have liquid holdings, so we can buy and sell because we have daily inflows, outflows, even if it has only been inflows lately, and a lot of inflows. Very transparent. You can see all our holdings on our webpage. So it's no black box, always fully invested, or at least 9.5% invested normally. And we have low fees, both management fees and low transactions fees, because we are long only. So we're going to focus on our flagship fund, AuAg Silver Bullet. I hope you have invested already. And actually, the last few weeks, not every day, but almost every day, all our 4 funds have made all-time highs on every day. All the 4 funds at the same time. We did one, of course, today from yesterday's. It's another all-time high for the Silver Bullet fund. But it has a name, another name, and that's Europe's riskiest fund. That's our tagline for the fund when we launched it. And that was a good tagline. Everybody got interested, not afraid. And maybe we should, actually it's a problem because there is a risk scale for funds, UCITS funds. It's 1 to 7, and we were 7. But they took us down to 6, and we were a bit disappointed with this, that it's not 7 anymore. But they made a new system where they also calculated not just volatility, but they also counted counterparty risks. And we don't have that. So that's why our risk went down to 6. But still, volatility, we are the most volatile fund, at least until somebody launches a lithium fund. I think they will beat us. So I also want to highlight, we have approximately 30 holdings in our funds, 25 to 30. Silver Bullet is 30. And I want to highlight the companies that we have in our fund that are also here at the event. From these 30 companies, we have actually, I think, 8 companies attending the show. And I will start with this one because it's one of our core holdings. We have 4 holdings with 8%. One is here, First Majestic. Keith, you are here. Did we get 11% return yesterday? Fantastic. And we actually bought another 100,000 shares. So we had 2.3 million shares, but now we have 2.4 million shares. And so it's 8% of the fund, approximately 315 million crowns. That's 333 million or 32 million US dollars. I said 30 yesterday, but we bought some and it went up a lot. So now it's $32 million just in First Majestic. Our friends, Aya, are here. Benoit, I see you. Fantastic. So we have approximately half, so $16 million invested in Aya. So we are a big shareholder. Also bought 50,000 shares yesterday. McEwen are also here, 850,000 shares, also at the 4% target weight in the fund. GoGold, 3.7 million shares. They are 2% of the fund. Avino is here, 1.4 million shares. Americas Gold and Silver, almost 2 million shares. And then we have some new ones that we just added last week that are here. Skina and Santa Cruz with 100,000 shares and 1 million shares. But they're only at the 0.5% target weight, so they are small holdings, our little babies, so to say. So this is 8 of the 30 companies. We hope to see even more of them next year, of course. So this is the fund, and had a good return. For some, this is a 1-year return, but this was 1 month, September 25. That is in Swedish kronor. And for the year, it's here it says 105.99%. That was up until the last of September, but now we are in October, so now it's actually 120% in Swedish kronor. So it goes fast. And compounded returns above 20% per year. But here is the difference. I said 105 or 106. In US dollar, it's 146% return. Or actually, after now October, it's about 160% returns. When you compare how much gold and silver went up, you have to take this number, not the Swedish krona number, so you don't mix apples and pears. But here comes what is also interesting for us. As I said, we have to beat the ETFs, and SIL is the largest silver mining ETF in the world. And up until this year, we are 20% better this year. And since the start, since inception, we are 86% better than this SIL. So that was important for us. When we get another institutional investor and they look, oh, you should buy the ETF, it's easy to buy the ETF. Yes, it's easy, but when you do an ETF, the construction of the portfolio gets really strange, and that's why they underperform in the performance. So this is very important for us. So what do we look at? I will try to make it easy. But number one for us is when we look at the miner, we look at the metal percentage, so to say. How much silver do they have? How much gold? How much copper? And then secondly, if there are miners here, we are really looking for liquidity in the stocks because we have to be able to buy and sell. We don't want to have a fund that has a big part that we cannot sell, and then if we get outflows, we have to sell the liquid ones and we are stuck with the illiquid stocks. That's not a good portfolio management. So for us, portfolio management, construction is really, really important. And so if you can get off the venture exchange, the big exchanges, I know it costs a lot of money. If you can get to the US exchange, that's good. The more liquidity, the better. Because we are growing fast, so we have to be able to invest, and you have to grow there. Another topic here, I want to say to the miners that are on the venture exchange in Toronto, please try to get your shares up over $1. If not, do a reverse split or something, because we are not allowed to buy stocks, low-priced stocks under $1, because it's something that the custodians don't like to see, because it's a space, like in crypto, they start something at 0.0001. And it's very easy to get a lot of high percentage returns that looks good. So try to get the price. Otherwise, you have to buy a lot of shares and the price goes up, but over $1. Then comes jurisdiction. That was very important for us from the start, 2019, where we said we don't want to invest in difficult countries in Africa. We don't want to invest in Chinese companies. That means mining in China and Chinese management. And we don't want to invest. We decided then not to invest in Russian companies. And that was good. But the good thing was that we had the process to do this. We could have said that we should invest in Russian companies, but it's to have as a manager, to have the process. Not like the other many fund managers, they went out, we have sold everything Russian, we are so good, we have sold. But did they have the process to think before something happens? So jurisdiction, and this was important 2019, and of course everybody knows it gets even more and more important. We see different things happen in different countries, and we also see politicians now really fighting for the metals. We see Trump. I mean, he wanted to make Canada a state. He wanted to make Mexico a state because they have metals. He wanted Greenland. He wanted the Ukraine minerals, metals. Congo. So nobody's watching this. I mean, you are, but nobody else. That's what they're out for. It's not the money, it's not the trades, it's not the tariffs, it's the metals. So they are, and let's see when the other people pick up this. Then for us, it's management, really, really important, of course, the history of the management team. Also coming to sustainability, our gold fund is actually the most sustainable gold mining fund in the world. Also our essential metals fund, 2 other funds. And this is not a bad green thing. It's a good thing because we want the companies to care about their people. I know they do. Actually, mining companies are really good at sustainability. When we want to talk with them, they take the meeting. I have been investing in other companies like solar companies. They don't want to take a meeting, even if they have problems with their staff or whatever. But the mining companies, they are really good at this. And we are really proud. Actually, First Majestic even made a video about the social work story, about how much it means for the people who get a job, for the families, or whatever is happening around the mine. So, and what I tell the companies is that if you do this really, really good, you will get more institutional investors. If you get more institutional investors, you will get more money into the stock. And the management, of course, they own stock. We own stock. Stock price will go up, so it's good for us. So it's actually an investment thing to get the sustainability better and better. And this is, of course, a dialogue. This is where capital has the power to talk with the companies. And as we said, we saw the companies before. From nothing, we are, I would say, at least in the top 20, in some companies, top 15 shareholders now. So they are starting to listening. Or they listened before. Or Benoit. Good story with AYA. We were actually the first institutional buyer in AYA at 150. And because we saw the new management and what possibilities that are in AYA. So now we have averaging up because we have to buy from the inflows. So, but still. So I would change. This will be very, very short, but I won't talk so much about macro. I will show no graphs. So it's a different presentation today. And I have no watch, but how I don't know. Oh, only 4 minutes. I'm going to speed up. So with this, we do really fast. $37 trillion debt. That's a lot of zeros. 125%. This is the US. Debt to GDP. This is not sustainable. Budget deficit, 7% in the US, ongoing. So there's only one thing coming, and that is more money printing. We are very sure US will low rates. They will have to do QE again to get the long rates down. And this, I mean, we think gold has gone up a lot, but now it will really fly when this starts. So this is just the beginning. So you need to own precious metals. But this theme is not about metals so much, because we will see gold. We heard 4,000, we did that. We see the banks say 5,000 already. The thing is, when do we get 10,000 already? I mean, 5,000 is only 25% from 4,000. And when will we see triple-digit silver, but not just 100, but 300 silver? And I got 3 different years. 2035, if gold just has the normal 10% a year, we will be there, 2035. But I wouldn't be surprised if we get a 2030. And I saw Lausanne said 2030 we will have 17,000 gold. So then we will have 10,000 2028. We shall see. It doesn't matter when it happens, it's just going to happen. But 10,000 gold, that's 2.5 times the price today. 300 silver, 6 times. I'm sure the miners will do 10 times, 20 times, or even more. So the really place to be is in the miners if you're going for the returns. We see a weak dollar. We can talk a lot about that, but we don't have the time, I realize. We see the margin expansion in the miners. They are enormous, and they're getting better and better by the day. And a big thing that hasn't really happened is the rotation of capital from the overbought, overvalued US stock exchange or the bond market. When that capital comes into our market, commodity market, that would push prices really, really high. So you got to be in the miners. What is important here is that the companies have become much more investor-friendly, raising rates, doing buybacks. They're not spending money on stupid projects like they did 2011. So it's a very different environment. So that's very good for us this time. And then there is the double buying. It doesn't matter if people, we don't want to buy the miners, we buy gold and silver. But that's good for the miners as well, because that takes the price of gold and silver up. So the miners win in every case here. And this is my dream one day. And I think First Majestic with the mint, they were keeping the silver until the price is good enough. When miners start to become price makers, like Apple is a price maker, they decide the price of the phone. Miners have been price takers all the time. Very interesting. Also interesting to see that we see maybe different prices on sustainable gold and silver versus not sustainable gold and silver. So a lot of things happening here. So you have to be in the miners. Miners, we are in a world they are unloved, underowned, and undervalued. And this is the perfect place to invest. So you have to be in the miners. And maybe lastly, I think asset allocators that are thinking about adding gold into the portfolio, they don't know anything about precious metals, gold miners, but they start to think about gold like Ray Dalio or the central banks. But the good thing is, if they add miners, we have a 2.7 times return of the commodity. They can use less of their total portfolio to get the same return and effect in the portfolio. So instead of having 10% gold, they can have 5% in our fund or in miners. And they have 5% more to use for something else. And I think that's important for smart asset allocators. Equity with low correlation, we're down to 0.2, almost over. And I think when they start to see the opportunity for the returns in this space, that will create massive flows into the equities. So you have to be investing in the miners.
Well, thank you. I think that was pretty straightforward. Now, pressed for time, if there are any questions, you have an excellent booth, which is in that direction. So if you have any details and you need to find out how to invest in AuAg Funds, I strongly recommend you to pop over there. But I think we will thank Erik with a big applause. Thank you.